Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Tuesday the 2nd of April in London. I'm Stephen Carroll. Coming up today, Israel strikes Iran's embassy compound in Syria as regional tensions in the Middle East escalate. Markets cool on the prospect of a June rate cut by the Federal Reserve as the US economy refuses to slow down. Plus, we'll tell you why Donald Trump's net worth dropped by $1 billion in just one day. Let's start with a roundup of our top stories.
The man dubbed Britain's bond market whisperer says that politicians need to pay more attention to how debt is raised. Robert Stheeman has borrowed more than £3 trillion for the UK government during his 21 years running the Debt Management Office. He told Bloomberg in a telephone interview that ensuring liquidity and stability will be key for his successor.
An efficient, well-functioning and liquid market is actually, in a strange way, it's a very human thing. It's a very democratic thing. The cliche is that people work in markets and are driven by greed and fear. That's the cliche. There's an element of truth to it. Another way of looking at it is that the market is composed of a myriad of different participants, buyers and sellers, and people who contribute towards a view that establishes an equilibrium and a price.
Robert Stheeman, who was at the head of the Debt Management Office during the Liz Truss era, he added that the Bank of England deserved more credit for how it handled that crisis in the gilt market. He also warns that Britain faces a tougher world awash with debt as governments compete to attract bond buyers.
Bernanke is pushing the Bank of England towards a new model of inflation scenario forecasts. The former Fed chair is set to publish a wide-ranging review into how the UK Central Bank communicates later this week. James Woolcock has more.
Back in November 2022, the Bank of England warned of a coming calamity, the longest recession since the 1930s. 1 year later, the governor was singing a different tune.
If you go back to last autumn, last November, when we did a forecast, we were predicting quite a long but quite shallow recession. And the economy, as I said earlier, has turned out to be much more resilient so far.
Defenders say the BOE has an impossible job trying to communicate both to financial markets and the general public at the same time. But some politicians and sceptical traders say reform is needed. On Friday, we'll hear what former Fed Chair Bernanke has to say. But he speaks at a politically sensitive time ahead of an election. And so Bernanke is likely to lay out a range of options and leave it to the MPC to choose how to proceed. In London, James Woolcock, Bloomberg Radio.
Now, the EU's main banking lobby says that European lenders won't be able to compete with their US rivals if ESG rules keep piling up. The warning from the European Banking Federation is the latest sign of the divergence in regulation between Europe and the US. EU banks now face more environmental, social and governance disclosure rules, adjusted capital requirements and the possibility of an explicit climate buffer. The European Central Bank says that these will safeguard the sector against emerging climate risks. While in the US, planned rules and guidelines are being walked back against a backdrop of Republican-led opposition.
The US Treasury Secretary Janet Yellen will wrap up a 4-day visit to China today after a series of meetings with senior Chinese officials, including the Vice Premier and the Governor of the Central Bank. While the meetings are aimed at enhancing ties between the world's two biggest economies, Yellen has also used the trip to criticise Beijing's trade policies. Bloomberg's Chris Condon is travelling with Yellen during the trip. He says it's yet to be seen if any of the criticism has any impact.
The question really that still hangs over this is her push going to move the needle in Beijing in terms of how they allocate capital in their economy. The U.S. says they're putting way too much into supply that's going to end up in distorting global markets rather than into demand. Are the Chinese going to consider this and change? I would say that's certainly unlikely in the short term, and we won't know for a while whether they might make an adjustment or they're just nodding politely and kind of waiting to see what happens in the next U.S. election, quite frankly.
Chris Condon's analysis comes as Janet Yellen sits down with the head of the PBOC today before wrapping up her visit with a press conference.
The Foreign Secretary, David Cameron, is warning that the UK's support for Israel is not unconditional. After an Israeli military strike killed 3 British aid workers, the government is under pressure to stop arms exports to the country. The Deputy Prime Minister, Oliver Dowden, says that ministers' positions on the matter are unchanged.
But based on legal advice that the Foreign Secretary receives, the Foreign Secretary receives periodic legal advice. I can assure you, as a minister, I'm constantly receiving legal advice across a range of issues. But what has not changed is the fact that he has not changed his advice to the Business Secretary in respect of arms exports.
Oliver Dowden speaking over the weekend there. The UK is sending a Royal Navy ship to increase humanitarian support to Gaza. Meanwhile, Israel is pulling some troops out of the southern Gazan city of Khan Yunis, saying that it's ended its mission there. Prime Minister Benjamin Netanyahu says that his forces are, quote, one step away from victory against Hamas.
The odds of Brent crude oil exceeding $100 a barrel are rising amidst global supply shocks. Military tensions between Israel and Iran were the immediate trigger for oil's jump above $90 a barrel last week. But the rally's foundations run deeper from Mexico's recent reduction of crude exports to US sanctions against Russia and Houthi rebel attacks in the Red Sea. Bloomberg's Garfield Reynolds says regional conflicts are only part of the picture.
The latest jump in crude oil has not owed all that much to geopolitical tensions. Some, but not a lot. The other thing that's happened is the supply picture has become much more cloudy. We've got Mexico deciding it doesn't want to export oil. That means US refiners are having to use more US oil. That has an obvious immediate read-through both to WTI and then also even to Brent. And amidst all that, OPEC Plus is seeking to curb production.
That's Bloomberg's chief rates correspondent Garfield Reynolds. The oil supply squeeze is kicking in just as demand around the world is ramping up due to manufacturing activity and summer consumption peaks.
And those are your top stories on the markets this morning. Euro Stoxx 50 futures are currently up by 0.1%. The MSCI Asia Pacific Index is also gaining 0.5%. 10-year US Treasury yields up 3 basis points at 4.43%.
Now, in a moment, we'll bring you more on the man described as the most important person the average person on the street has never heard of. Plus, we'll get more on the US Treasury Secretary's trip to China as well. But other stories that caught our eye this morning, a couple of interesting ones from the UK as well. We have the Resolution Foundation warning about another double-digit increase in rent on the way, squeezing, of course, people, particularly those who are perhaps a little bit earlier in their career. And if you're a graduate, the jobs market's getting even tougher. Data from Adzuna showing that the number of vacancies for graduates fell 30% from a year ago in February.
Yeah, it's really, really tough. But apparently the squeeze in terms of the labour market in the UK is particularly acute for newer graduates, for young people, an alarming trend in terms of the deterioration in the number of jobs that are available for them at the start of their career. Apparently this is about the kind of the labour market, the loosening of the labour market, and that it's young people. The issue, though, is, and the question mark is around whether businesses are therefore actually investing enough into, future talent. So that's the big worry.
Yeah, well, look, and you wonder as well how this is going to play out in a general election campaign as well. If young people are seeing rents going up, finding it harder to get a job, that might make them, think very carefully about who they're going to vote for too.
Yes, absolutely. Our politics in the UK certainly seems to be becoming more generationally divided. That's one story, though, that you can read on the Bloomberg terminal this morning, all around working in Britain by Isabella Ward on the terminal today.
We want to talk next, though, about the person who's been key to the functioning of the UK's government for the past 21 years. Robert Stheeman is stepping down after more than 2 decades leading Britain's debt management office. In that time, he's overseen the biggest explosion of public sector borrowing in a generation, having raised at least £3 trillion in debt. Now, he's been speaking about his career to Bloomberg's FX and rates reporter Alice Gledhill, and Alice is with us now. Morning to you. Talk to us first of all about what the debt management office actually does and why Stheeman's departure is so significant.
Sure. So the DMO is in charge of debt sales. So they raise money on behalf of the government by selling billions of pounds of bonds to investors every year. Now, Robert Stheeman's been in charge there for more than 2 decades, and he's finally leaving this summer. And, I think that's significant because it's actually this incredibly important job. So, as you say, most people in the country probably have never heard of him. But, the DMO raises the money that keeps the country running. And secondly, during those 2 decades, he's acquired this huge amount of of experience and wisdom. And I think you can probably argue that the job is now more important than ever when you consider just how much debt that governments, not just the UK, but governments around the world are issuing now.
Yeah, absolutely. I mean, he's overseen this huge increase in the UK's borrowing. Let's listen, though, to a little bit of the conversation that you've had with him. It was over the phone, but about the sort of challenges that he's seen in that 21 years.
Policy making cannot be divorced from the reality of the market. That's not me trying to be clever. What we see here is the market. The market is not something that you can bludgeon into accepting your point of view. It's the market's view that ultimately policy makers and politicians need to take account of. That doesn't mean that that view is invariably correct or is always the right one. It is just harsh reality.
So harsh reality. I mean, this has become a very political issue, hasn't it? What have been some of the biggest challenges that Stheeman's seen?
I mean, first and foremost, I would just point to this huge increase of debt that he's overseen. So, of course, it's the government itself that decides how much the DMO needs to raise. It's not the DMO itself, which picks things like, the different maturities of bonds and when to do the auctions. But he tells us a nice anecdote. It was, I think, the first full fiscal year at the DMO that he oversaw, and the amount that he needed to raise doubled to about 50 billion. And he said he was really excited at the prospect of this nice challenge of raising 50 billion. But over time, that grew steadily, and I think it peaked during the pandemic at nearly 500 billion pounds. This year, it's 265. And he's managed issuing that amount of debt through some pretty tumultuous times. So he joined in 2003. So he's lived and worked through the global financial crisis, Europe's sovereign debt crisis, the pandemic, and of course the gilts meltdown in the Truss era of 22.
And of course that's something that you talked to Robert Stheeman about when you spoke to him as well. Here's his view of that moment in 2022.
I wouldn't be honest if I didn't say that I was, I'm sure like others, genuinely concerned because the LDI crisis was clearly impacting on market functioning. And this is something, and I do think the Bank of England, actually, I'm not sure it's, people criticise the Bank of England a lot, but I don't think it's received enough credit for the way it got through that period and the way it also assisted the market and actually the pension industry itself to get through what was an immediate classic, absolutely classic liquidity crisis. It was straight out of a textbook.
Yeah, certainly him reflecting on that pivotal moment for the gilt markets as well. Alice, what have been some of, I suppose, the blemishes on his record? Are there any?
I don't know if I'd really call it a blemish, but I would point to one auction during his tenure where the DMO didn't sell all of the bonds they planned to on that particular day in that particular sale. It was the financial crisis in 2009, and Stheeman, as is his right, made a decision to reject some of the low-ball bids for the bonds. And he's always very keen to stress that that's because part of the DMO's mandate is to get the best value for the taxpayer. And it was already a very volatile period for gilts. Lehman had failed 6 months earlier. The UK banks were being bailed out. The Bank of England had just announced QE, quantitative easing, for the first time ever earlier. And investors were trying to get their heads around that. So it's this really kind of choppy, tricky time. And as you expect, when the news broke that the auction hadn't been fully covered, the price of gilts fell because it's very unusual for an auction not to be fully bought. And Gordon Brown, who was Prime Minister at the time, came out with a statement defending or sort of asserting his confidence in the market. So I think that just kind of underlines the difficulties of the job and the pressures of the job. You're in the hot seat when things go wrong.
No, absolutely. Did he mention advice then for his successor? Do we know much about who might succeed him?
We don't, but I think we're going to know very soon. I think if he were to give advice to his successor, it would be about ensuring that you always have liquidity so that you can always sell the debt you need to, no matter the size of that target. I think there's various ways that he's ensured that he can do that. So the gilt market has become much more international under his leadership. So it's no longer this fringe market that it once was. And, he spends lots of time travelling around the world speaking to international investors. It also issues bonds in a wide range of maturities, which appeal to different parts of the investor base. I think he'd also make the point that the market isn't just a load of numbers on a screen. It's the views of a huge range of different people, and politicians and policymakers ignore those views at their peril. I think we heard him talking about that point earlier. You can't simply tell the market that it's wrong, and governments need fully functioning markets.
Yeah, very interesting stuff. Alice Gladhill, our FX and rates reporter, thank you very much. And you can read more of Alice's story on Bloomberg.com and on the terminal. The bond market whisperer who raised £3 trillion for Britain.
Now, let's move to another big beast in the markets, of course. The US Treasury Secretary Janet Yellen has met a host of Chinese leaders on her second trip to the country in 9 months. While it is a sign perhaps of more stable US-China ties, Yellen was also highly critical of how Chinese leaders have managed their economy. Joining us now is Bloomberg's Federal Reserve reporter Christopher Condon, who is travelling with Janet Yellen, and he joins us live. Chris, good morning. Thank you so much for your time. Just overall, how has this trip gone?
Well, I'd say it's gone pretty well from the U.S. perspective, certainly. Yellen came here to Beijing, and we're just about to hear from her. Within about 10 minutes, she's going to hold a press conference here at the U.S. ambassador's residence in Beijing. She came here, and her number one message was that the Chinese are over-stimulating the supply side of their economy, particularly in new industries and clean energy. And the U.S. and other countries are very fearful that this will result in a flood of goods heading out onto global markets, distorting prices and threatening some industries that the U.S. is keen to foster at home. She got that message across very loud and clear. In fact, last Friday in Guangzhou, in southern China, she just hammered away at that theme. And somewhat surprisingly, I think, the Chinese have not responded in any harsh manner. There was a commentary in Xinhua, the state news agency, but there's nothing direct from Chinese officials castigating her for the public criticism that she gave them. The talks seemed to go fairly well. They had all the attendant ceremonies surrounding the visit with the dinners and tours and such. So in that sense, she got her message off, and she hasn't seemingly provoked the Chinese in any particularly negative way. And the Chinese crucially agreed to a new sort of component to ongoing talks that will focus exclusively on this overcapacity issue.
One of the other things that Janet Yellen has mentioned during this trip is that Chinese firms will face significant consequences for supporting Russia's war in Ukraine, of course, a really important issue for Europe. What could those consequences be?
Well, ultimately, of course, it could include sanctions. The main tool that the U.S. and the Treasury has in this domain is the ability to cut off financial institutions from their access to U.S. dollars. If you're a bank and you operate in any way internationally, or even you're just a large domestic bank in your country, you need access to U.S. dollars, either through a branch in the U.S. or through a correspondent relationship to a bank in the U.S. If they decide, if a bank is designated by the Treasury, you lose that access. And it's almost like a death sentence for a large bank. And it's taken very seriously around the world in all countries. I think the Chinese will be very sensitive about any suggestion, if she were to make it, that the U.S. would be considering sanctioning in this kind of penalty against Chinese banks over their dealings with Russia.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.